Hi, I'm Emily Flowers, a CDLP and divorce mortgage planner with the Divorce Allies. I help women understand how to make smart, empowered decisions around the marital home and financing before, during, and after divorce. Whether you're trying to stay in the home, refinance, buy new, or simply understand your options, I'm here to guide you through the financial maze with clarity and compassion. So let's dive into what divorce mortgage planning really is and how it could be the missing piece in your strategy. So you don't know what you don't know, and it could cost you your home. So when we're talking about hiring a team, we talk a lot about, I'm an attorney. The attorney might say, well, we need to get, an idea of what the home is worth. So we're going to call in a realtor and we're going to get this report and they're going to give us a value. And it kind of ends there. And then they start making all these decisions. Oh, you want the house? Okay, you can have the house. Oh, no, you want the house? Okay, you can have the house. And at no point has any of those people looked to see if you actually qualify. And so it's really important to understand that you have to know your numbers. We have to look at the mortgage and the financing and all of that from a holistic perspective. So we want to see what the affordability looks like. Are you comfortable with it? What are real options? Are you going to need support to qualify? If you do, there could be some timing issues that we need to deal with. We just need to take a look at a lot of things, and getting a CDLP involved really early on in your process is key, because they can start gathering documents with you, putting them into what's called a mortgage planning report. And that divorce mortgage planning report will also include your credit report. So we're going to look at all of your liabilities or your debts that they are, and try to figure out who's going to be responsible for them, all of that. And then it'll start spitting out options. So we can look at comparisons side by side of what you might want to do in a finance situation. So let's say we're looking at your traditional home, and then it goes into your option just to refinance, and then maybe it's a refinance where you're paying out equity to your spouse, and maybe the next one is you're maybe paying off debt inside to get a better cash position for yourself. So there's that, and then we can also take maybe an equity buyout from the spouse, and they keep the home, and we're looking at purchases and what you can afford and how much you would put down and all of those things, and seeing really what you're comfortable with. The next phase of that is the CDLP can look at the initial or the progression of your settlement agreement and just make sure that the language in there allows you to execute on all the things that you've planned out. Because sometimes they put some language in there, or they don't have the timing correct, or things like that. So let's say, for example, that you need to collect child support in order to qualify to refinance your home. Well, you need to collect that for 6 months, and then you also have to have 36 months of continued support after the refinance is over. So I've seen settlement agreements where you only get support for 6 months. Well, automatically that will not qualify as income for your refinance. And so there's things that we can prevent before you sign those final documents. So it's really important, because you don't know what you know. So what else can we do. Examples I see all the time are removing somebody from title on the loan, thinking that they don't have to remove them from the loan. So a lot of the times I've heard people get bad advice from maybe other experts. I've heard of their accountant saying, just get a quick claim deed and you'll be fine. Unfortunately, all of the experts need to stay in their lane. So I don't give tax advice. I don't give legal advice as a CP, and yours shouldn't either. But you should always question an expert that is giving out advice in an area where they may not know. But again, you don't know what you don't know. So you may take that accountant and go, oh, okay, just sign this quick claim deed, which then removes you from title, but you're still obligated on the loan. And so if your divorce settlement agreement isn't written properly, you may not be able to move forward on any other housing if your spouse hasn't refinanced you off that loan or done a loan assumption to remove you properly. Refinancing before support is finalized. There are times where you want to just get a jump on things and you only have maybe 60 days to refinance the house, but you need to collect a certain amount of support for a certain amount of time before that income actually qualifies. Again, timing is an issue and it needs to be written into the divorce settlement agreement properly. Buying out a spouse for the equity portion, but you didn't verify the value with a lender ordered, lender paid appraisal. So the other thing that happens is, okay, the real estate agent maybe gave a CMA, but you're not selling the house. So that value could be really inflated. Well, you and your spouse have both had to order appraisals, and then you had a tiebreaker appraisal in there, and the lender can't use any of them. They have to order their own. Well, what if that appraisal comes in a little lower? You might not have enough equity to actually buy out your spouse. So there's all these like little tricky things that can happen in the nuanced things that can happen. So if you want to stay, you need to look at, can I afford to stay or should I stay? When, of course, we want to stay. This has been our home. It's very emotional. You're talking about, oh, that I want to keep the kids as normal as possible. I want to keep them in the same school district, and I'm not in any other housing in that school district. All of those are very legitimate reasons to want to stay in the home. However, making a decision on your home is both emotional and financial. So when we're looking at that and we're looking at other options, so we want to look at everything side by side. Like I said, in that divorce mortgage planning report will show you, can I afford to stay? Am I comfortable with that payment and all my debts versus my income? Now, the good thing about mortgages and mortgage planning is the mortgage lender will never let you go above about 45 to maybe 50% of your income as debt. So you're always going to have a cushion of about 50% of the income. So if you make $3,000 per month, all of your bills and your mortgage can't go over $1,500. So it does provide some cushion, but are you able to live on that other $1,500? Are you comfortable? Can you get your hair done still? Are you going to be eating ramen? Do you have to say no to some of your kids' activities to do that? There are trade-offs in here, and that is very important for you to understand. And a CDLP can help you plan that out and help you start at least a budget, right? So we're not going to be the ones to do your budgets with your financial advisor or maybe an app that you use on your phone, but we are there to show you options to make you more comfortable. Well, to put you in a better cash flow position, we may want to pay off all of your debt with your mortgage, and then you only have that one payment, and it opens up a lot. Now it might be a bigger payment than you were planning on, but it also eliminates some of these other bills and then puts you in a better cash flow position. So these are the things that need to be discussed, because you might not be thinking of all these things at one time. So having somebody to really guide through those things and help you be comfortable with your options, it's really, really, really important. So the next thing we need to think about is what's smart for one person isn't necessarily smart for another. So all of the options that we talk about should have pros and cons and timing. And if you fit that mold, if you're going to be able to, if you're going to need more support, are you going to need a cosigner? Are you going to need more time? There's a lot of things to think about. And just because your friend who just got a divorce got to keep her house because it was the best option for her, does not mean that you will be able to keep your house, because it might not be the best option for you. And that may also take some more experts and team members to help you with that. So maybe a therapist or a divorce coach can help walk you through the process of letting the house go. You know, you've built this life, you've built these things, but financially, it just doesn't make sense. So it's really important that you go through, okay, if I kept the house, it looks like this. If I buy him out with equity instead of equalizing it another way, it looks like this. If I pay off all my debt with this mortgage and I only have a mortgage and maybe a car or something, what does life look like then? Do I have enough for groceries? Do I have enough to take my kids on a little weekend trip every quarter? Whatever the goal is. Does my agreement state that I can actually execute on this? And you may have to say no. You may have to fight to get certain items into your agreement so that you can execute, because again, your attorney does not know the mortgage guidelines. And so we want to make sure everything's very properly written, and even sometimes has like a tax code attached to it because it says maintenance and you're going FHA, and FHA only likes alimony. You know, those are the kind of technical things that your CDLP or your divorce mortgage planner is going to do for you, right? They're the expert, okay? So when we're talking about utilizing a divorce mortgage planner or a CDLP, we're going to show you what it looks like to actually work with us, right? So we're going to do a readiness review. We're going to show you the income and support strategy. So maybe we're gathering all these documents, right? We're going to gather your current mortgage statement. We're going to gather, if you have a HELOC on your home, so a home equity line of credit, we're going to gather that. We're going to gather your insurance, your OA dues, your taxes. We're going to gather W-2s if you have them. We're going to look at proposed support. We're going to look at your credit report and all the debts that you owe. And we're going to pack those things up, and they're going to spit out into this other form. And it's going to show us clearly, there's like this cute little orange line, but it shows us, do you have enough to do the thing that you're looking to do, to refinance, to pay off all your debt, to do an equity buyout, to purchase another home? Are you ready? Do you have all the things that you need? Or are you going to need to start looking for a cosigner, or maybe another family to buy a house with? Are we going to need to ask for more support? Are you going to have to equalize equity in another way? What does the picture look like? So a true readiness review is so important. It's there to kind of wrap your brain around what this is realistically going to look like. So you're going to get lending guidance. We as lenders, because we are lenders, but we just specialize in divorce, and divorce has its own set of guidelines. We as lenders are going to be looking at these very specific nuances. Every time you tell us something new, it changes the game every time. So, okay, now I'm going to be getting support. Okay, well, now we have a collection and a continuance timeline that we have to work with. I just got a new job. That's a completely different strategy, especially been out of the workforce for a long time. We have to talk about what kind of job that you got. Is that income going to count, or do we have to wait 2 years? All of those things. What about appraisal and title issues? Maybe you've paid for 3 appraisals already, but the lender needs to order another one, and the lenders came in a little short. Your house was worth $500,000 and theirs came in at $4,000 for some reason, and it was supported by the market. Or maybe your appraisals were done 10 months ago and the market has completely shifted, and so it's only a certain time. So now that appraisal is worth less because something happened in your neighborhood. For example, I live in a neighborhood with a golf course, and the golf course went to absolute crap. The people are fighting each other over it. And now the golf course is being bought by somebody new. Well, that can affect our home values significantly. So there's things with that. We see title issues all the time. Sometimes you're looking to get like a big lump sum and not monthly support. So we need to bring in a CDFA to see if we can put that money into an income generating account, and then figure out what the collection and continuance guidelines are for that. We need to coordinate with the mediator or the attorney or somebody like that. So we really have the CDLP in your case will wear a lot of hats. They will coordinate with a lot of people. They can even be expert witness for you. They can sit in a mediation or a collaborative environment with you. They can be in the courtroom if they need to be, but they, as a witness again. But what you need to know is they can wear a lot of hats. And one of the most important hats is go and make sure that they have copies of your settlement agreement as your settlement agreement progresses before it gets finalized and signed. Once it is finalized and signed, we cannot do anything. If your attorney can amend it or do something like that, that's the thing. But we have to adhere to exactly what is shown in your agreement. Here's the other thing maybe you didn't know that you might need to know. When you collecting support, like we have a 636 rule. When you're collecting support, you have to collect it the exact same way every month for 6 months. Okay, so if you are $1,000 a month on the first of every month, and it comes, from his wages into your individual account, can't come from joint, all of that. We have to show a pattern every month in your bank account for 6 months. Now, if he says, well, I paid for soccer, so I'm only going to give you $800, then we have to start that clock over that 6 months. He paid you $1,000 a month for 5 months, and the 6th month he paid you $800. Your clock starts over. And so these are the things that you could not know. The attorney doesn't necessarily know because they're monitoring the support that's being paid. There's little pitfalls that can happen all along the way. So you can talk to us through the Divorce Allies membership. You can schedule consults with your CDLP, and you can also download through the Divorce Allies and Ally Circle. You can also download guides and free to talk about. There's so many things that you can do. So remember, you don't need to figure this out all alone. Inside the Divorce Allies, we work as a team to help you make confident and informed decisions that support your future. If you're navigating divorce and housing, and you're choosing, a CDLP to work with, things like that, it's your first step. Really make sure you pull your credit. That's number one. But contact a CDLP to work with. It's really, really, really important. And choosing somebody like at discovery or as soon as you can in the process is really important. I hope this really helps you, and I am sure that you will come out of this process so much more empowered and ready to face even more financial numbers and your beautiful financial future.